Hey traders, wanted to shoot a quick video here to share a recent trade from one of my members that was a beautiful trade. It's a pre-earnings trade on a stock called COUP, and it's a combination of a diagonal and a calendar. So you can see here selling the 250 call, buying the 260 call in the next expiration week, and then in the calendar selling the June 12th 270 call, buying the June 19th 270 call. So we've got a diagonal and a calendar. Gives us a payoff diagram that looks like this. This is from Option Net Explorer, which is a great piece of software that I've just started using. So you can see here we've got zero risk on the downside, which is great. And we've got a nice big profit zone on the upside up until about 280, with the stock last trading at about 235. It's a very short-term trade. This was entered on June the 2nd, and the front week expiration is June 12th. So the idea is that you have this on and you close it out before the earnings announcement. That's the key. We don't want to take any earnings risk. We don't want to hold this trade through earnings. And you can see, as I said, zero risk on the downside. Will make about a 7% return if the stock drops. And on the upside, obviously we don't want the move up to occur too quickly. This is our T+0 line, but we can actually withstand a bit of an up move if it happens. Here you can see the T+3 and then the T+6 line. And we actually don't mind being in this zone towards expiry. So usually a lot of times if you do get a move up early in the trade, you can usually hang on for a day or two, and then the trade starts to swing back into profit. So let's walk through the trade. The good thing here is we can go through day by day. You can also use this little playback feature, which is pretty cool. And you can see it progress in 5, 10, hourly, daily intervals, which is quite cool. But let's just go through day by day here. This is obviously Australian time zone, so this would actually have been near the close on the 1st of June in the US. Just keep that in mind. So forward one day, stock's gone down a little bit, and we're sitting here, nice gain of 9%. And then as we progress through, you see the stock's not moving around too much. We've gone down a bit, sitting up here, nice gain of about 19% at this point, about 13. And this was the day we closed out before earnings. So ended up with a 14% return, which was a really nice trade. So that was a great one. The other one, very similar, was on LULU. So I want to show you that one as well. I'll just go back. That was a June 1st entry as well. So you can see here, similar sort of setup. We had a diagonal here again, 350 and 360, and then a calendar at 370. A little bit of a bigger position. Did have a little bit of risk on the downside, not much. You can see here we're going to lose about 7%, $780. You can see that there in the bottom, about 800. And all the risk is on the upside. If we kind of zoom out, you'll see that. Risking about 11,000 or so on the upside. But again, nice big profit zone in here. The idea is that a lot of times these stocks have a little bit of a rise into earnings, and also the volatility tends to stay elevated in the lead up to earnings. So these options in the back week here don't decay that much because the IV stays elevated. So again, let's walk through this one and see how it progresses. So already sitting in a pretty nice profit after a few days. And again, I think it was June 10 or June 11 that we closed out. So again, another about 30% return, which is really nice. So fairly slow moving trade. We didn't get a huge run up in the stock, which is obviously what you don't want early on in the trade. Didn't get into the zone, but nice little return. Pretty much perfect for what you want the stock to do over the course of the trade. So there you have it. That's one of the trades that I like to do before earnings. And again, just crucial that you close those out before earnings. And again, keep an eye on position size. This is a big position, so you'd want to trade a bit smaller if you're a smaller trader. And if you're a beginner, it's probably not overly appropriate for beginners to be trading this sort of strategy. But if you want to learn more, head over to optionstradingiq.com, and you can read all about this sort of trade and many others. So thanks for watching, and I'll talk to you soon.